According to federal prosecutors, Clarence Ward told the IRS his trust had paid more than $7 million in federal taxes. IRS records show the trust had actually paid zero, and then the IRS sent him a check for more than $4.1 million.
Money coming through, everybody asking who helped me break through that tax guru. Got me thinking big enough. That tax guru. Ain't no looking.
I'm Tyrone Taylor, enrolled agent, and this is case file 029, the man who got a $4.2 million refund on taxes he never paid. Now, before I tell you what Ward did with all that money, you need to understand how a refund is actually supposed to work. Just as a reminder, a tax refund is generally money coming back to you because you've paid more in taxes than you owe or received tax credits that are greater than what you owe. Maybe too much was withheld from your paycheck. Maybe you paid too much in estimated tax payments during the year. Whatever the reason, those payments have to be real. You can't create a multi-million-dollar refund just by putting multi-million-dollar tax payments on a tax return. And according to the evidence presented at Ward's federal trial, that's exactly where the problem started. In November of 2020, Clarence Christofer Ward electronically filed a federal tax return for a trust in his name. It was on a Form 1041, which is generally the federal income tax return used for estates and trusts. Ward listed himself as a fiduciary, and on that return, he claimed the trust had paid more than $7 million in federal taxes for 2019. More than $7 million. Based on those claimed payments, the return generated a refund of approximately $4.1 million. But there was one major problem. According to the government, IRS records showed that the trust had never paid any federal taxes. Zero. Again, the return said more than $7 million had been paid. IRS records said nothing had been paid. Now, you may be thinking there's no way a refund that large actually gets sent out. But it did. Before the IRS determined that Ward's claim was false, the agency actually issued him a refund of exactly $4,197,981.28. More than $4.1 million. And that's where I want to stop for a second, because there's an important tax lesson here. Just because the IRS sends you a refund does not mean the IRS has permanently determined that everything on the return is correct. A process refund is not a permanent seal of approval, and Ward was about to find that out, because according to the evidence at trial, once he received the money, he started spending it. He purchased 4 residential properties in Chattanooga, Tennessee. According to the government's sentencing announcement, approximately $1.58 million of the fraud proceeds were used to purchase those properties. He also purchased a luxury automobile. Money went into brokerage accounts. And according to the government's trial announcement, some of the money was spent on vacations. But here's where the story takes another turn. Because getting money through fraud can be one federal crime. What you do with those proceeds can create additional criminal exposure. And that's exactly what happened here. Ward wasn't ultimately convicted of one federal offense. He was convicted of 12. 1 count of wire fraud, 10 counts of money laundering, and 1 count of making a false claim to the IRS. The district court later explained that the financial transactions underlying those charges were each greater than $10,000 and occurred within the United States. So think about the progression. The false tax claim generated the refund. The refund created the proceeds. And then certain transactions involving those proceeds supported additional money laundering charges. That's something people sometimes miss in financial crime cases. The legal problems don't necessarily stop when the money hits the bank account. What happens to that money afterward can matter too. So how did investigators build the case? The government had the trust return showing the claimed tax payments. IRS records showed the trust had never made those payments. Investigators also had evidence concerning the refund and the financial transactions that followed. IRS criminal investigations ultimately investigated the case. What the public record I've reviewed does not exactly tell us is what first alerted the IRS to the fraudulent refund. What we do know is that by April 30th, 2024, a federal grand jury had indicted Ward. He was arrested in June. And unlike a lot of the tax crimes we discussed, Ward didn't plead guilty. He went to trial. In September of 2025, the case went before a federal jury. The trial only lasted 2 days. On September 25th, the jury came back with its verdict, guilty on all 12 counts. Afterwards, Ward asked the court for a judgment of acquittal and a new trial. The court rejected those requests. Then came the sentencing. On February 2nd, 2026, U.S. District Judge Thomas P. Barber sentenced Ward to 5 years in federal prison. But prison wasn't the only consequence. The court ordered Ward to forfeit $4.2 million representing proceeds derived from the wire fraud offenses. He also forfeited his interest in the 4 Chattanooga residential properties purchased with approximately $1.58 million of the fraud proceeds and involved in the money laundering. Now here's my That Tax Rule take. There are 2 things I want you to remember from this case. First, a trust isn't magic. Trusts can have legitimate tax and estate planning purposes, but putting something inside a trust doesn't create tax payments that never happen. The refund in this case wasn't generated because Ward discovered some special trust loophole. It was generated from tax payments the jury found had been falsely claimed. Second, and this is probably the biggest lesson in the entire case, IRS paid doesn't mean IRS approved forever. The IRS can process a return, issue a refund, and later determine that the underlying claim was improper or fraudulent. Now don't misunderstand that. I'm not saying somebody who makes an innocent mistake on a tax return is suddenly in Clarence Ward's situation. A federal jury found Ward guilty of knowingly filing a multi-million-dollar false claim, wire fraud, and 10 money laundering offenses. But if a refund ever hits your account that you know you're not entitled to, don't assume the money becomes yours simply because the government sent it. And if somebody is selling you a tax strategy that supposedly creates a huge refund for taxes you never actually paid, start asking questions. Where did those tax payments come from? What supports the numbers on the return? What tax rule actually creates the refund? Because the IRS processing the refund isn't necessarily the end of the story. Clarence Ward got the money, more than $4.1 million, but eventually his case went before a federal jury, and he also got 5 years in federal prison. If you enjoy learning how the tax system actually works through real federal tax crime cases, follow That Tax Guru. Real tax crimes, real court cases, real lessons, That Tax Guru tax crime file stories.